Hi my friend, welcome back to the introduction into price action. Today is part 2 of how to identify high probability trading areas, whether it's support and resistance, supply and demand, or buy and sell zones. Today we're going to look at how to spot good buy zones in an uptrend. Yesterday's video, or the previous video, was we just basically focused on a downtrend. Today we're going to look at how to spot them when the market is moving up. Kind of the same concepts but in reverse. So I just wanted to do a video just to clarify some of the points made yesterday. So before we get into the video, if you are enjoying the series so far and you haven't yet subscribed to the channel, hit the subscribe button now, the thumbs up, and let's get into the video. So first off, you can head over to TradingView. Now, everything I teach here is exactly what I talk about in my TradingView ideas when I post the trade ideas. So you can head over there, follow me, and you'll be able to learn a lot more when I'm talking about when trading the markets. So today we're going to look at the Euro USD. Okay, it has been trending up, and as of late, and I want to show you exactly how the market moves. So again, we are, just let me see here, we are the monthly chart moving up. I'm going to get an arrow here. We are moving up, as you can see, and we are retracing back up. If we look left, we're retracing back up this huge down leg. Okay. So when this is happening, what you want to look for on the charts is, if you just want to stay, you're a trend follower and you just want to stay with the trend, you want to look for pullbacks to newly created zones, and we're going to identify these in a minute. Newly created zones or previous highs, swing highs that have been now eliminated on the charts. And if you want to look for areas where the market is likely targeting and look for targets, or you want to look for areas for short-term selling opportunities going against the bigger trend, you want to identify previous lows in the last downtrend and areas where the supply demand, buy and sell zones, support and resistance areas as this market has been moving down. So first off, we're going to identify the areas on the chart that could be key as the market is moving up here. Also, a good area, one thing I didn't point out in yesterday's video was sometimes incorporating Fibonacci retracements, preferably the 50% and the 61.8 and the 7, I think it's the 78 one. Those three kind of areas, if they can line up with previous lows or previous highs, that just gives the trade more confluence, more high probability. So we are moving up. We want to see where the market is likely targeting. So if we just slowly move down this leg here, we can see the drop here, and the market pauses here. You can see the green candle and pauses, and then drops again, creates a new low. So this would be likely an area on the chart where the market could be targeting before retracing downwards. It is around 113,500, and we also have a low here, a previous swing low, which is, let me see, here we just want to mark that. Okay, the market is moving up above that. So we can just next, a newly created buy zone is here. The reason that's newly created is we had the swing high, new swing low, and then the market rallied up again, creating a new high on the monthly charts. So that is a newly created buy zone, demand zone. It's an area where there's been institutional buying before and likely to happen again. Again here, there's been institutional selling here before, so we should expect sellers to come in there either short term or long term for a pullback. And we just want to mark this high here that is just taken out. Okay, in the charts, this is at 1. This is at 110,800, and this would likely be a good area for buyers to wait for the pullback and then go back into the longer term trend. So they're the kind of areas on the chart that we're looking at. Like I said, sometimes it's good to incorporate the Fibonacci after a big move down here, and just see if that lines up with any areas on the chart. And as we can see, where we are now is the 61.8 fib line on this monthly retracement. If we did go up to that low here, up that high there, that's not really the start of the move. I like to go from the start of the leg. But either way, we are around that 61.8 Fibonacci area now. It is lining up nicely with this monthly sell zone and this low here. So we could expect some selling pressure coming into the markets here. So this is how to identify the zones. Again, when the market is moving up, see the start of the leg down here. The last swing high in this leg down was here. We can see the market just comes back up from this low here, just comes up 3 months straight, takes out the high, then retraces back down to that area, and then rallies up again, comes back down to test this area, then rallies up again, creates a new high. So these retracements, they are going right back down into these newly created zones. So this could mean we get a deeper correction when euro starts to go down. This could be the likely path. For selling, I'd be looking, start to look selling around this area. Now, in the next videos, you're going to learn how to get into and identify a good area to sell when you're approaching or at these trading zones. It is all about reading price action in the lower time frames. And in the next video, I'm going to show you how to read slowing of momentum as price comes into these areas, and then use an indicator to actually get into the trades. Now the way I analyze the market is very basic. It's a 3-step approach. It's identify the zone, identify slowing of momentum, and wait for the signal inside the zone. 3 steps, 3 simple steps. And this is what I'm teaching you here. It is super simple. And the best way to approach trading is the KISS method. Keep it simple, stupid. And if you follow these videos, you will learn a lot. And if you implement them, going on the higher time frames, your trading will improve. Sorry. So that's basically, if you're just trading the monthly charts, you'll be looking to sell around here where you are now, because we've lined up, and buy here. First target would be here, second target here. You'd wait to see how price action reacts as it comes back down to this breakout area. These, as you can see so far, these retracements are popping down. This is first swing high, and this move up, swing low, new swing high, comes back down into this area. So we could expect, once this does retrace, we get the deeper pullback down towards 108. We will have to wait and see. So that's how. If it was only trading the monthly charts, we're looking to sell around now and buy on the pullback, or buy down at the deeper demand buy zone on the monthly charts. Now let's zoom into the weekly charts. I'll just clear all these drawings. Again, as I said in the previous video, you can just implement this across any time frame you're trading. The kind of same rules apply. But as I said, you always want to know where you are on the higher time frames. Just basically as I explained yesterday, if you are if the market is moving up here and we are coming into an area where there has been institutional selling before, you have to be very cautious when you're buying in start buying inside those areas. Okay, you preferably want for a clear breakout of that area, the market to come back down and test the area, and then that's when you want to be start looking to buy. You don't want to be buying inside institutional selling zones where there has been institutional selling before. And again, you can head over to my trading view profile and you will be able to see a lot of my every post here is exactly the method that I'm explaining here. If you want to see a perfect example of what I'm talking about, if you can look at the British pound idea that I placed here. We had the breakout, we got the pullback down to the zone, down to the previous high, and then we got the rally up. If we have a look here, it works like magic if you understand how these levels work. So you can head over and have a read of them. So let's get back to the charts here and have a look what we're looking at here on the weekly charts. Dun, dun, dun. We're moving down. Got a down leg. Look left again. Look left and up. We were tracing a huge down leg. So areas we want to identify the key areas. Where has there been institutional selling before as we're coming down here? And this leg down on the weekly charts is very choppy. So we look left and up and we can see clearly here we had the swing high and then the move down. Look at the big gap down here. So this is an area where we would kind of draw a zone here, this level here where we are now. Where price is attracting now. Last low it's taken out on the weekly charts is here, and on the monthly charts this whole area would have been the buy zone. But as we zoom into the lower time frames, you can actually see where the buying actually started to create the new high. And this is it here. We had the initial rally, the pullback, and then the rally took off 3 weeks ago, where we are now, coming into here. You can also see this on this weekly pullback here. We had the rally up, the pause in the market, and then the new high. Market comes back down to test this area that created the new high and then takes off again. And if we look at this here, this is where the market took off again. The market comes straight back down to this area, tests it, come in and tests it, and then rallies up. So we can expect, once this starts to sell off, and in the next videos you will see how to read the price and learn how these actually sell off. So this first target, but we could get a deeper pullback down to there before taking off again. So looking at this chart, you see how it works. It's like a stepping stone on the way up. Its targets are going to be to the left, where the market is likely targeting. And if you're looking to buy, you want to be buying on pullbacks. You don't want to be selling, or sorry, starting to buy coming into here. You're coming into an area where there has been a large selling presence before, and this was only last year on the weekly chart, so it is quite new. It's untested, so we can expect some sellers to come in here. We will see. And yeah, so that's it. As we're moving up, you can see again here we had this huge rally up. This, as we're moving up, the market is pausing. And the area that actually caused the buying to create the new high taking out these highs here, but this one took out this high, rallies up this area. This one takes out this high. So just let me draw them. Zoom in here. So this is the downtrend. This down move, this down leg, just here. We get the initial break of the trend line. The market pops up and takes out this high. Then comes back down. So you can see this is the huge impulse institutional move. It created the new high after the trend line break. Then it pulls back, and then we get another level here. You see this level comes up and takes out this high. We get the pullback. Then this area here comes up and takes out, well, creates a new high, creates out these highs, starts creating a new high. So we're starting to trend up. Comes back down to test it. Pops up, creates a new high. Comes back down, pops up, pauses here. Then we get the impulse move up through resistance, creates a new high. This is a newly created zone here. You could say this impulse green candle there to the upside. So targeting this looks like a good selling area here. Again, if we matched up with the monthly charts, could match up with the monthly charts. We are the key Fibonacci in the monthly too. Would be a key Fibonacci on this weekly area too. If we just put the Fibonacci in. See right where we are now. This video is a lot more clear than yesterday. So watch them both. You will learn a lot. Super simple to see, and you can, like I say, incorporate this with the lower time frames, but you always want to know where you are with the higher time frames and what the market is doing then. And it will, like I said, it always will increase your profitability. If you are thinking about buying a position, but then you zoom out to the higher time frames, then you realize, like this here, the market is bullish, but you could be on a 1 hour chart, and you're zooming in to trade the 1 hour chart. So you're thinking about buying, and you zoom out to the higher time frames, and you realize that you're at this area where there's been institutional selling before. You're at key levels on the higher time frame charts. Will stop you from entering those buy trades and getting tricked into buying inside an area where there's been institutional selling before. So hope this video helps. And the next video we will look at how to identify market cycles, slowing of momentum, and how to use my TRFX King indicator to get into the markets. And the final video will be putting this all together. The first 3 or 4 videos, put it all together and how to use it as a successful trading strategy. This is exactly what I do when I'm posting my weekly signals, weekly trade setups, and to my group of clients. And if you go over to my TradingView profile, it is exactly what I talk about on every single post that I post there. So hope the video helps. Don't forget to hit the like, comment below. If you are if you have any questions, comment below. Subscribe to the channel, hit the thumbs up, and I shall see you on the next video, well over pips and gains.